Well, it's hard to talk about the budget without mentioning coronavirus. The Chancellor mentioned it 19 times in 1 hour of speech, so that must be a record for a single word in a budget speech. He announced three areas of measures directed at public services, measures for individuals and measures for businesses. For public services, we heard there'll be extra funding for the NHS, R&D on vaccines, and also extra funding for diagnostic testing. For individuals, we've already had trail before the budget that statutory sick pay would apply from day one of the illness. Today we heard that's day one of illness or self-isolation based on guidance. And there'll be fast tracking of doctor's notes. There's also going to be help for the self-employed or those not eligible for statutory sick pay. But the real big guns were left for businesses. We heard today that there'll be a refund of up to 2 weeks statutory sick pay for employers. As long as those employers are not too large, it's limited to employers with fewer than 250 employees, and that's tested at the payroll at the end of February. We've got business rates relief for small businesses, part of the Corona package. We've got a £3,000 grant for businesses which are eligible for small business rates relief. So that's about 700,000 businesses are all going to get a handout of £3,000. Extra resources into the time to pay arrangement. So if businesses are suffering from cash flow slowdown, they're going to have a greater amount of time to pay their PAYE, their VAT and their corporation tax. And the government's also going to give an 80% guarantee for loans of up to 1.2 million from the banks. So if businesses are really struggling, they can go and take borrowing from the banks, and the government are going to back that up for them. As ever, the Chancellor wants to announce things to please the voting public. So here we have a number of measures for individuals. So one we were really waiting for was the outcome of what would happen to entrepreneurs' relief, a relief that costs the Treasury £2.6 billion a year. There were lots of opportunities for true reform here. We could have heard that the number of trades that would qualify would be reduced down, so the less risky trades would be excluded. We could have heard that non-participating people in the business, so non-working directors, would be excluded from the relief, but none of that was considered by the Chancellor, and really he's dodged the opportunity for true reform, and all we've had is a reduction in the lifetime allowance from £10 million to £1 million. That's going to disappoint a lot of business owners who are really shooting for the stars on a future sale of their business. We also heard today that those people who'd undertaken transactions which the Chancellor would have viewed as artificial in the run-up to the budget to try and avoid these changes may also find that the action they've taken hasn't worked. Other big change today was around pensions. This was driven a lot by the senior consultants in the NHS who were being disincentivised to actually come to work, because by coming to work they might pay more tax than they would earn. Again, another opportunity for true reform dodged. The problem with pensions would apply for people who earn more than £150,000 under current rules. That £150,000 threshold is now being increased to £240,000. So that does take lots of senior teachers, medical professionals, people in the police service out of this problem, but the problem still remains for the higher earners, to which I think the voting public have a lot less sympathy for. Another element of the reform is at the very high end, where you're restricted from making your pension contributions. The contribution was limited to £10,000. For people earning more than £300,000, that's now limited to £4,000. Little sympathy will be given to those individuals. Businesses weren't expecting a lot out of this budget. We had hoped some years ago the corporation tax rate would come down further from its current rate of 19%, and 17% was what was on offer a few years ago. But we'd heard a few months ago that the Chancellor had done an about turn on that. So the rate of corporation tax, the main rate, remains at 19%. By not reducing the rate to 17%, the Chancellor has saved himself about £6 billion a year. That's given him the firepower to do other things in the budget. The UK is going ahead with its digital services tax, so there's an additional 2% digital services tax, and that's really targeted at the Facebooks, the Amazons and the Googles. There's additional tax for them to pay to make sure that the fair amount of tax is being paid. There is a global initiative to tackle technology companies around the world, but the UK is still moving ahead unilaterally with its own system, which there's a fear will cause these digital businesses to relocate elsewhere, but we shall wait and see what happens there. Structures and Buildings Allowance, a new capital allowance that came in October 2018. This applies to newly constructed buildings or refurbishments to old buildings where other capital allowances are not available. That was introduced at a 2% rate. That's now been increased to 3%, I think, to encourage investment in infrastructure in the UK. That will apply from April 2020. And then the other big measure for companies in the UK is a further push on research and development. So for the larger companies who currently get their above the line credit at a 12% rate, that's increasing to 13%. Now this is really important. The UK competes with a number of other jurisdictions around the world to have a competitive and attractive R&D system. So the more we can make it attractive, the greater the chance that we can retain some of that innovation in the UK, which helps to drive productivity. The Chancellor announced a number of measures which will keep employers happy. We've got the trailed announcement around national insurance. So the employees' national insurance threshold is going up to £9,500. So most employees are going to get £104 a year richer. Less than a tenner a month, so it may not feel like a lot, but that is going to cost the Treasury more than £2 billion a year. So that's a fairly serious budgetary measure. There's no meaningful change to the employers' national insurance threshold, so employers' national insurance will remain about the same sort of levels. We heard that the employment allowance is being extended from £3,000 to £4,000. As a reminder, that's not going to be able to be claimed by employers with employers' national insurance liabilities in total of more than £100,000. So it will only be those employers with something between 20 and 50 employees perhaps who can benefit from this. But the increase is good for those smaller businesses. It will take some of the pressure off them. Rather worryingly, we saw in the small print of the budget papers that there will be a review on EMI share schemes, enterprise management incentive share schemes. These are very popular with fast-growing companies to recruit and motivate their best and brightest employees. And we can only hope the review is with a view to extending or maintaining the scheme and not to in any way restricting it. And then also disappointingly, it was the Chancellor's last opportunity to do something about the off-payroll working rules, which are proving to be very unpopular and come into effect on the 6th of April 2020. This is the reform of the IR35 rules, and unfortunately in the budget papers it was confirmed that they're going ahead as planned.